following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman. This is the 22nd of April. My pleasure to be here. And, we've had some great shows since 8 o'clock this morning. I hope I can keep that standard up, going right through until this afternoon. Tom O'Brien comes back. So you've got me now. You've got your swimming lesson with Think or Swim. Fabulous show. You've got Steve Rhodes. Steve discusses, he uses the panoply of techniques that he's discovered and put together, and he gives you a look at the markets that I always find extremely refreshing, because it takes you to areas that maybe you've just forgotten about, or you didn't know quite in the detail that he goes through things. Great show. Then, of course, you've got Dave White, our guru, our electronic guru here, who really has a unique way of looking at markets, actually has a unique way of looking at the world, always refreshing. I love that. And then, of course, you go right back to Tom O'Brien, 3 o'clock till 5. And I bet he takes a little time off today to go swimming. I believe it's a beautiful day out there. All right, let's get to the nitty-gritties. The Dow's down 58 at 17,924. S&P's down 8 at 2,082. The comp index down 67 at 48.78. You've got the volatility index up only 15 cents at 14.10. That's interesting. Day is young. Very good. All right. And then you've got the E-minis that we're looking at right now. So I've got leg D going to a peak D yesterday. Remember the Chapman wave? We really look at Ds, and then you can extrapolate from that data. Other things can go on, but D's really your objective, to go from the lowest, most identifiable low bar and merely count each successively higher peak until you get to the fourth highest peak. You can go 5, 6, 7, even to a G. And a G is where other things can happen. It can recycle, as we saw in a number of stocks. And then what it does, sometimes it recycles, and the very next peak is a D, and boom, all of a sudden you've got something very clear. We've got that here in the E-minis, down 550 at 2,077, testing the 9-period exponential moving average, a little black line you see there. That's the chart on the left. Look at the MACD. MACD over here wasn't even close to the strength that it had in those peaks that went to that peak F, alternate count B, and then to that new B over there. And look at the stochastic, keeps giving a right shoulder failure pattern, comes up and turns around, and it's at 84%. That's good. But believe me, the moment that the stochastic goes under 80%, you're looking at something completely different. Now, I really want you to do this to show you there's a 17%, over 17% gain in the move from 1794.75 back in February. And it's only 1, 2, 3, 4, 5, 6, 7, 8, 9. This is the 10th week. This is the strongest leg in the S&P that I've ever seen, certainly using the futures as a single leg A. In the S&P cash, it turns out to be leg B, but that A was just 1.25 points, the little V shape that was made at the top. So this is an extraordinary move. By any measure, we should be taking a little time to give back, and we'll talk about that as we move on. Plus, it's got the W formation. If you look at the Dow chart that I usually show, you'll see that the weekly chart is a W formation. I think that there's a pullback unfolding right now, which is why my subscribers to my opening call, we went short and added to short positions. We'll see what happens. Hey, you got to do what you got to do. We've got a peak D in the 120-minute chart, and it's in leg C to the downside, and it's got this dashed Chapman wave inside wedge target line that says that's support at 2073. If that breaks, then you're looking at a left side, right side price time match, which should take you to 8 o'clock on the 24th, 22. So that's Sunday night, where you could be testing this area here. If we close negatively, sharply down today, if we bounce by the end of the day, and the S&P is only down about -3, then you might see chopping. And I actually prefer that we go down in stages and you keep coming back as if nothing happened. But actually what you're doing is you're just making lower lows and slightly lower highs. I really like that pattern because it's a stealth decline. I want to see, I don't want the whole bad news yesterday after the bell. It was just too much. I was saying to myself, oh man, I like it in the market. I don't want it before the bell, or I don't want, in other words, I don't want the futures to do all the action and you come to the real thing the next day and all the damage has been done. Not if I'm looking at the downside. If I'm looking at the upside, that's exactly what you want to see. All right, let's just run through these now. Gold is GC is down 5 at 12.45. Made that leg D. This is possibly a peak D, so expect some consolidation here. The test is 12.29, the 9-period exponential moving average in the weekly chart. I wouldn't be surprised if gold rests a little bit because the dollar was looking quite strong. Oh, it's still not bad. I mean, quite strong on a short-term basis. I still think that the trend right now is for lower prices in the dollar. This could be a nice counter-trend rally, at least for a little while. And let me just see. So I'll do high-grade copper, then we'll go to our callers. We've got Dave White, the koala bear of Wall Street. I'm a grizzly and he's a koala. What is this? Hey, I'm going straight to Dave White. Dave, how are you? Oops. No, he's not on. Oh, I see. I was going to say, that's very unusual. My engineer just put in there, Dave White, the koala bear of Wall Street. So at least I read. Al, aren't you proud of me? I'm at least reading my IMs. That's good. Okay, let's go back to our story here. So I want a little bit of free range here. High-grade copper is acting quite well. It's actually very well, considering that it could have broken down. Instead, it's trying for a leg D in the weekly chart above 2.3.23. So that's a good sign. So the whole commodity aspect gives the fund managers some sense of some cover, so they can at least go somewhere with their money, and the fund money that came in with taxes and all that, with people putting towards their IRAs or whatever. And that's really important because there's got to be a rotation. And I'm thinking that the rotation says we don't crash, we just come down to a certain level, and that's where I get the big test of saying, is this support? Is this the support we're looking at that is going to give us a rally to the all-time high, or going to break down further? So I'm looking, that's really my thinking here, and I'll go through it in greater detail in a moment, is that we're going to be pulling back, but we're going to be pulling back and not crashing back. And because of that, because of the rotation, we will find some support fairly soon, 7 to 9 days, maybe, I don't know how long it takes. Normally the song that I sing at this particular time is Riding High in April, Shut Down in May. This is the April pullback, so I'm not sure yet whether the song pertains to the market right now. So let me go through. This is what I want to look at. You see the TLT, which is the 20-year T-bond fund, trying to find some kind of a base here. It seems to me that if you're looking at rates could gyrate between a certain level. But if the TNT, and I'm going to go to the TNX, this is the 10-year. If the 10-year breaks above 20, something else is going on. Right now, it's at 18.77. That's the 10-year. It's at 1.87%. I'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So I was asked what leg is the RB in, and that's the New York Harbor Blend Stock RBOB continuous contract. So this is crude oil. And what we're looking at is that in the monthly chart, it's come down and it's gone below support, but it is way above the lows that were made back in 2008, late 2008. So it went, this is a continuous contract, gets smoothed out. So the prices I'm giving you, I can't give you because it's minus 0.4447. I can never recall why in TradeStation we get minuses in some stocks. Which don't split. Oh, because it gets reconfigured. All right, well, I can't give it to you other than to say the major low that was made back then went to a high way up in the threes, in 3.04 in February of 2013, and then it went sideways, and then it broke down, and it came tumbling all the way down to 1.18. So then you can get a good sense. So this is the first decent rally it's had since a year ago, since January of 2015, over a year ago. The weekly chart is in leg C, and the daily chart, I'm going to go to the contract that you asked about, RBM16, and that is, I've got this as not a recycle, I've got this as a new leg B. So it went to a leg E, right there, pulls back, MACD, everything turns down, starts a brand new move. I'm not going to give this an alternative count just yet of a G. This looks to me like it has all the characteristics of a B. It says to me that this New York Harbor Blend RBM16 should actually continue rallying. Now, I'm also going to, if you don't mind, grab the crude oil because I never finished with that. And that corresponds to what I'm looking at in crude oil itself. I could be wrong here because this is the difficulty of the right side. Have I begun a new buy? Everything about it says that I've begun a new buy signal and actually to a buy mode with the stochastic at 87%. But sometimes you can fail if you don't significantly take out the left side high, and we haven't. I like crude oil as it stands right now. Yeah, it could chop around sideways, but it's got a higher highs, higher lows look as it stands right now. So the answer to your question is in the weekly, it's in leg C. Sorry, this is different to the other contract we were looking at. Just have to check. 36.95, 37. Yep, this is leg B in the crude oil. And in your contract that you were looking at, that's leg C. So in the RB contract. Got that done. Now the CRB, I wanted to do the CRB, and then I want to actually take some time. I just want to free think the way I love to do it, but when I'm just by myself with no pressure. And I'll explain what I mean. TRCCI. I'm looking at the Reuters. This is the right there. This is the Reuters contract. Thomson Reuters Continuous Commodity Index monthly with a Chapman wave notation. So we went to a trough E after hitting 690 back in April of 2011. It comes all the way back down to 350, what was that? 351.87 January of this year. At 351, it's up 50 points. That's really spectacular. It's impressive. So now what we're looking at is that the monthly is beginning a move to the upside. The stochastic is at 24%, which is good for this particular move, but it's the MACD that I'm really impressed with. Just the slow grind to the upside with the price beating the actual move. And now you've got a week and a half or so to go, 2 weeks or whatever it is, 1 week and a half in April to complete the month. And the MACD is starting to improve tremendously, but you haven't gone, you're just on the 0% line. So far, all the indications are saying that the commodity index is improving. It isn't under any circumstance can I say it's out of the woods in the monthly chart. I can say in the weekly chart, spectacular move, nice V-shaped pattern from the V-shaped turnaround. And that's important. Why? Because it's telling me that the commodities are in play. We saw that with high-grade copper. Let me take a moment here. I think this is leg C, probably peak C today in the daily chart, and we should still go to a D above 405 in the daily. So leg C kind of corresponds to what we're looking at in that RB contract. And now this is still positive action that we're looking at in the daily. Most importantly, I was thinking of, I wanted to just show you, look, wheat had a spectacular move up to the upside. It went to peak C. I couldn't give us an alternate count. I'm just going to be strict. At 86%, the stochastic says that's a C, and we should somehow or other get to a D above 510 and 6/8 and 3/4. So that's the high of the 21st. We'll watch that. This move here in the weekly says, hey, big move up. Maybe it takes a little time now before we get that next big leg to the upside, unless something fantastic happens by Tuesday of next week. And that says that the wheat, which is trading at 481, actually has a bounce towards the 491 level on Monday. By Tuesday, Wednesday, it's back at 504. And then bloop, it's just a little eye blink away from making a new high. That improves the weekly a lot. But if wheat starts to break down and go under 472, we're looking at much more time. Corn did the same thing. Corn popped to a peak C, pulled back a little sharper than I would have liked to have seen in this move. And it's the same thing in the weekly. So here again, it might take a little time, but I suspect that corn's going to try to make it higher. And I'm just going to do one other thing right now. I want to look at... I wanted to put it into the U.S., if you don't mind. This is a peak G in bonds, in the 30-year U.S. T-bond, Treasury bond continuous contract. It's still a leg C, a peak C. In the weekly, if we didn't have that bad fall just 3 days ago, we would have been here and would have said, hey, could make a rectangle formation and climb towards a peak C. Now, this is going to be very important. See, the Dow's now only down 40 and the S&P is down 7. I say only because, yes, it is lower, but after the news and everything and after a peak D top, we really should be closing today very nice double-digit down if you really want to be talking about a sell signal, and we haven't got that yet. So, okay, and so how I wanted to tie the two together was to say that if bonds actually start to rally, and they rally from 162.5 right now to over 164.5 by Tuesday or Wednesday as the market pulls back. I'm saying not if, but it has to be the diametrically opposite move, that the money flows into the safety of bonds as it comes out of equities. At this point, I still see a rotational aspect, which is kind of keeping the markets alive. Now, I do want to do a bunch of things. Oh, wait, one more question. UAL and IYT, I did that yesterday. I'll do it again today. UAL was not looking very good. UAL, I believe, is going to test it's at 51.03. I think it's going down. United Airlines trading down 174 at 51.02. I think it's going down to test the 200-period moving average of 46.09. If it takes that out, then the low that was made in January, the week of the 22nd, at 42.17 will be the target. It's going to be real tough to break above 55, the 9-period moving average. Actually, it's going to be real tough to break above 53.20. All right, so that's that. And the IYT, which is the iShares of the transportation average, failed to make a new high. Oh, it did. It went to 145.85 on the 21st, peak F, and I think it went to G. Yes, 146.07. So this is either a C or a G. So it's an alternate count. But it's worth taking a moment here because I don't want to just be dismissive of a particular chart. I will take time on the IYT as soon as I get back, which is the transportation index. Dow down 36, S&P down 8. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Just during the break, I always answer questions from the den during the break so that by the time I get back here, I've already done a whole bunch of stuff, so I don't even remember what I was doing before, but I do now. It's the IYT. So let me just say the question was about the euro and the yen. The FXY, which is the currency shares Japanese yen, has made a peak E in the daily, and it looks at 86.80 that it wants to test the 85 area. And the weekly is making a peak D, and the 9-period exponential moving average at 86.70 looks like it's going to be taken out soon. The MACD and stochastic are still good. So it does say that there should be support in the 84.40s if there is another pullback early next week. So let me just go to the euro was also EUR USD. Peak D, and look, doesn't this look like an H that could give you a failure pattern of an A to B equals C to D, the lightning bolt pattern? So be careful at 1.123, 1.115 is the 200 period exponential moving average, which I think it could get to. So I've covered those things. Just real quickly, I'm going to get the other email questions. WLL, Whiting Petroleum, A, B, C, it's just made a D, is holding very well. I like it. I would prefer that at 10.46, it's up 85 cents. I prefer next week if I could have another look at it. If you remind me, I'd like to look at it in the 892, 930 area, maybe even 892 if we can pull back enough. But it is acting very well. If you're long, I don't know what the question is. If you're long, hold it because it's doing very nicely. Southwestern is SWN. It's just hit the 200 period moving average at 12. It's trading at 1190. It could now take a little bit of a breather as it bounces around a little bit higher, a little bit lower, but 10 to 961 are the levels to watch real closely. Question about the index. All right, let me just do this quickly because it's part of what I want to look at. This is a peak E, which is almost certainly by the end of the day going to be a sell signal immediately with a down arrow to a sell mode. That's the way it's looking at right now. The weekly is still strong in all the indices, and that says to me at 108.38, down 2.27, if in fact it even just tests the candle of the 1st of April, 106.73, to me that will say, really nice. This is, you can maybe take a little more time. You don't even have to go much lower than that. I'm expecting this to be a breather. I would prefer to see the Dow at 17,500. I don't know if we're going to get there. That would say to me, good, now it's time to have an assessment to say, are we going to go down further, or is this the place for the next rocket ship to the upside? And then the question is, Google and FANG. I'll just do that real quickly, and then I really want to just do some free thinking here. So Google made a peak E. Now I can put the down arrow because everything is negative about Google on the daily. The weekly, so far, all I can say is that it's failing with the MACD and stochastic much lower. There's a real good chance it's going to test the candle, Chapman wave Roman candle of the 11th of March with a low of 685. And the only way it'll do that is if it breaks 700 in the next week. No, if it closes any day below 700. Then the 688 is the 200 period exponential moving average, but that left side low of 685 really kicks in, that whole area. So upside looks very limited for Google now. It could have a bounce, try to fill a little bit of the candle wick, maybe hit 732, and then I think it comes back down again. It needs a rest. It's had a spectacular move, and that's the way I'm looking at it. Just real quickly, I'll do the Facebook. Facebook got that H pattern. If Facebook does not hold into halfway of the candle, if at 109.20 down 424, if Facebook doesn't hold 110, how can 110? I mean 108. I'm sorry, 108 on Monday or Tuesday. It's going to test the low of this candle right here. That's 106.52, and the upside resistance is at 111.31. So I'm going to stop there, and I'll tell you what I want to do. You see this chart right here. I'll show this to my subscribers over the weekend. I just saw it maybe an hour ago. Developers pitch for a chance to build Winthrop Square Tower. This is the Boston Globe today. The race is on for the right to build the tallest building in the financial district. What have we been looking at for years now? Look, it's lovely buildings are being planned. But I have to tell you, this is actually a race. Thinking is not in the question. Showing off is the question. We're getting to this period of excessivity. Do not think that it's for naught, that it's going to happen and everything is just going to be roses. It's for the next generation. It's fantastic, but fantastic for the next generation. We will pay a price over the next few years here in Boston. So that's what I want to discuss. I want a little happy note there. Let me show you something else. Yeah, this is Boston in 1964. And then 2 years later, you started between 1968 and 1983, when Reagan was president. That's when you broke out from the 1,000 to 750, 550 area, just trading up and down for a long time before you broke out in 1983. This is oh, why did I put it over there? This is Boston. That building there, that phalanx right there, is the Prudential Center. That was the only building. The Boston Globe today, 421, that's yesterday, 16. Article on the Prudential Center, the first commercial building since the 1930s, some 30 years later. This article compares GE's current move to Boston. Within 2 years, going back to the story here, within 2 years, 1966's, the Dow made 1,000 to 1,020s a ceiling to the mid-700s, 500s until the Reagan 1983s, when it finally powered through 1,000 decisively and never looked back after that. So I just wanted to give some kind of perspective of what I'm looking at here. Now let me do something else. I want to here we go. I could not find the chart. Oh, the chart I'll look at is right here. This chart that I showed Tom last night, I believe this is the one I could not find today. Oh, I think it's in another section. All right. So I'll go to the copy that I made that I showed subscribers. The exact, almost to the day, move from the May 20th high of last year of 18,351 to the decline of the 24th of August, 2015, 15,370, back again to the high of the November the 3rd at 17,977. Took that amount of time, and if you take that top of November the 3rd, 2015, down to the bottom that was made on January the 20th, remember the S&P went lower, the Dow held that low in February, so it didn't break the 20th of January's low, 15,450. Yesterday, well, today's the exact day. If you go day by day from the left side to the right side, almost exact price time match. So it missed by 1 day, and it missed by 190 points. Actually, a little less, 186 or something like that, or 184 points. It missed by. I mean, is that a nice technique? Left side, right. Wait a minute. There's the cup formation, the arch formation, the cup formation. And now we've got the left side of an arch. I know a lot of people are thinking this. I just do not see it under those conditions. I'm talking about the socioeconomic, political, that whole aspect there that I use as an integral part of my thinking. I don't see us plunging down to the 16,000s or something here. Let me talk about that when I get back, because this is a free-thinking Chapman Wave talk today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. So let's keep going with these with the panoply of aspects that I want to look at here. So within the context of the different sectors, look at this. When you go to I had a question about Caterpillar. I'm not sure. I have made 80.50 puts, and I'm wondering what you see as a short-term target. Thanks, Jeff. So, Jeff, let me just show you a couple of things here. Caterpillar is in the category that if the commodities are working, then Deere and Caterpillar should see a better response than obviously on the way down. So Caterpillar right now is at 77.78, down 88 cents. It's made a peak D. The MACD and stochastic were turning down. But what's really important is that the weekly chart is still showing a lot of strength, so that even if Caterpillar, as a stock rather than as a commodity, pulls back, I think that the whole area of 74.51 in the 9-period moving average of the weekly chart, the 73.34 of the daily chart, the 200-period moving average, that should all be support. But I'm not even going to talk about that, because I could only put a down arrow is if we close, if Caterpillar at 77.74 down 92 actually closes below, say 77.40, then I think the stochastic goes to 79%, and the MACD turns down, it closes decisively under the 9 EMA, then I could put a down arrow. At this point, it suggests that there's a sell signal that could go to a sell mode quite quickly, but that weekly chart is saying this is still strength, and it's in the area that should see some kind of strength. I want to talk about things just like this in this free thinking moment. And what's really important is you want to see how it tackles this whole digestive phase of 77.25 to about 73.70 if it does come down. It could even make a right shoulder and then turn down. But at this point, the weekly chart is saying I've gone here very quickly from peak A to peak B to peak C to peak D. If there is a peak, a lower high next week, I just need a little bit of a breather, but I'm strong at this particular point. So so for your puts, you're in a great situation. I'd look at the upside and say, where am I wrong? I'm just going to be absolutely outright. If Caterpillar goes above 80.89, the high of the 19th, close out your puts, because I think that it's pretty much done for this move. It might take another week or two before it develops enough weakness rather than energy to start coming down. That's the way I'm looking at it right now. Stay in the puts, but just be a little careful about a bounce at this particular point. Okay, a couple of things I needed to look at. I want you to do this just quickly. I had a question about it, and it does pertain to what I'm looking at. This is the Qs, if you don't mind, instead of the IndieX, I'd rather look at the QQQ. Most people use the QQQs. The way I'm looking at the QQQ series is that at 84% in the stochastic of the weekly and the MACD not that good, but way underneath where it was at the highs at 150.75. This is a single leg A, and I would not be surprised at all if there is just enough weakness to create some kind of a vortex in the support in the QQQ, so that below 107, a close below 107 says not only will you tackle the 106.53 low of the 24th, but you're probably going to go right into the 105s. And I wouldn't be surprised if that occurred quite quickly, especially if today, instead of closing down just a little bit in the Dow, the S&P closing down only 3 points, or even better than that, if there is a close towards the low of the day as nervousness creeps in and the VIX index starts to really climb, instead of being down 6 cents at 13.89, it closes above 14.35. I'd say be real careful. That's really what I'd be looking at. But in the meantime, the Qs have a lot of resistance at 110. I could see a little H pattern forming here, but I am looking at a downside action between 107 to 106 over the next 5 trading days. Hope that helps. Now, I want to also look at BRK.B, because that's really important. It's making a P. It's made a peak D. Look how nicely Berkshire Hathaway is holding up 84 cents at 145.70. That's why the positions that we have right now, I want them to work. I want them to work quickly. I want them to work well. Otherwise, I'm getting out of them, and I'm saying, you know what? I think there's going to be more upside rather than downside sooner than I think. I want 5 to 7 or 7 to 9 days of lower lows and lower highs. I don't care how much lower. I just want them to be lower. I need time if I'm not going to get price. I want that for the energy to move up, because I'm still thinking that we're going to make all-time highs sometime, probably this summer rather than later. So that's what part of my free thinking. Now, let me just show you a couple of things here. You see the QQQ is 111.08 printed right there and 108.10. This is the Chapman wave projections. But look at all the resistance now in the 110s. 4 icons. Some were resistance, some were support levels, but we're way below at 108.48. But all of a sudden, you've got support at 108.28 to 107.94 in the 10-minute. But it's the 120-minute chart that I'm really looking at. Look at all those signs over there that were tremendous resistance levels. It does have in the weekly 113.79, but that's looking out. And then in the monthly, it says 94.64 to 93.53. So this is part of what I wanted to do right now. I wanted to show you, I wanted to look at that Boston Globe thing. I wanted to look at, I just wanted to go into places that are giving you specifics and generalizations, because the generalizations are going to become very specific in 2016 and even more so in 2017. I don't want to waste any time now talking about the politics of politics. Boy, I could go on for a whole session on that. This is good, not to tell you who to vote for, just to tell you what's going on in my perspective, which is just the way I look at things. So now we're using this here. You see this? This is the Chapman wave support resistance lines or numbers. So let's do that with the diamonds, DIA, the Dow Diamonds. And it says at DIA, and it says at 182.26 there's strong resistance, and we went to 181.42. And now it says on the downside in the daily 173.53. Well, that's way down, right? 5 points. But it says in the near term 179.02 to 178, and 180 is the resistance. So I just wanted to go through a couple of things why I like to use this particular program that was written for me, just kind of to look to see if it's confirming what I am looking at here. So I wanted to do that. And I wanted to just say something like a Berkshire Hathaway monthly chart is broken out, weekly charts in leg C, nothing wrong in the technicals. And they're in insurance, they're in Coke, they're everywhere, Berkshire Hathaway. So this is something to me that is very important. I'm looking at it and saying, you're my benchmark. I'm going to keep my eye on you. We don't have any position on it. But then there's another benchmark, and that's GE. And GE is down 61 cents. That is a huge move. That's going like an A to B equals C to D to the downside. And I'd already drawn this. I couldn't get it to measure to the right side before because I didn't give it enough room. But now you've got that, and it says if GE is on its way towards the low of 29.79 that was made on the 10th, 2.5 points from its all-time recovery high, let's say 32.05, then that's going to impact. That's part of the market that I love to look at. I've done it for 15, 20 years. I don't know. I've used G, IBM, Triple M, and UTX as my Dow quartet. So this is very important. So now I'm just going to, as we're going into the break, IBM, look, IBM is holding quite nicely. It's down 71 cents. But look at Triple M. Triple M is still holding the 9-period moving average, and UTX, same thing. I'll be wrong. Look at that. It's holding very nice. Just went to a D. I'll be right.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, everyone. We're back. So just a couple of things. Gold, remember I was talking about this Chapman wave uptrack right there? So the uptrack says, we've tested it many times, it's been a springboard to the upside, but once you get to a peak D, which is making today, you really have to be careful, because at a peak D, that's where other things can happen. You saw that. Look how fantastic it went from the low that was made back on the 18th week of the 18th at 10:49 of 2000, and that was December 2015, and it just each 136 on my numbers. So it only took 1 week of consolidation before it broke to B. It took 2 weeks, and the third week, boom, right up. The peak C, 1, 2, 3, bam, right up. And now we've gone 1, 2, 3, 4, 5, 6. This is the 6th week. We haven't broken out to the upside. Now you got to be careful. So it says that the 1227 9-period moving average, something that's viable, especially if gold gets anywhere close to 1235, and over Sunday night, if it pulls back because the dollar's strong, it's going to test that red line at some point, and that's really important. Okay, wanted to do that. I wanted to also mention AWK. I think it was AWK. AWK is American Water Works. I spoke about this the other day. I mentioned it in my webinar that I did, a month ago or so ago. I spoke about the water, how important it was. There was a particular water stock we just missed getting into. It did very nicely, but now it's starting to pull back. But then all of a sudden I saw this go by in the ticker last night. I thought, oh my goodness, I haven't even looked at it. Well, it confirmed a peak D. Now, what's really important about this is that we have an alternate count, a G/C in the monthly. You have a G/C in the weekly, which means that if you go 1 penny above peak G/C, you've gone to a D. So you've actually resolved the quandary of where am I? Because now you're at a D. That's where you've got to be careful. Look at the plunge, 72.40 to yesterday's low of 68. That's a big move down. For one of the top stocks in any exchange. And look, the weekly chart could be making a peak D. I wanted to do that. Why? Because I was asked about why did I want to do it? Because I was looking at UTX, United Technologies, made a new recovery high today. But there was the GC. And now we've suddenly gone to a D. See, it doesn't matter. It's by one. If it's by 1 penny, it makes a difference. It's gone to a leg D. Now it says you've got to be a little bit careful because United Technology, which is my second leading stock, GE, my prime one, is saying, uh-oh, I might be in for a little bit of a pullback here. Let's see what happens after this. So there you are. That's how I wanted to put this. This is why I wanted it to be a free-thinking day. And the other thing I wanted to do is I had a question about the 9-period moving average. Yes. So the 9-period moving average, you can see in the Dow chart, if I can just go to that quickly. See, in the Dow chart, the 9 EMA is support so far. And I'm looking at this, and I'm saying, you keep rotating like this. It says that there are some stocks in the Dow that are holding well. And let me just look at CVX, probably bouncing today. Look, CVX is up nicely. It's making a peak D, holding near the highs, but it's getting real close to some kind of a pullback. Look. That's CVX, yeah, Chevron, is right at the 200-period moving average in the weekly chart. So that 9-period moving average at 99.61 is going to be critical next week, all of next week. Let's look at Exxon. And Exxon is up 39 cents. Peak, this is a leg C. Well, it could be an alternate count. I'm calling it a C. I think it's going to pop one more time next week for the D, and then we've got to be careful. So I'm just trying to put this together. I wanted to show a little bit. I did for my subscribers. I gave that AWK. I sent it out as a study piece for my subscribers. I had questions about the Chapman wave methodology, and it's not automated. Every single letter you see, I type in. I'll discuss why on Monday, but suffice to say that I haven't found the computer resolving minor problems that become major problems if you don't do it right. So that's the issue. Hey, folks, have a wonderful weekend and a happy Passover to those celebrating, and I will see you on Monday. Check out my opening call. A lot of information coming up this week. Have a great rest of the day. Stay.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,